welcome in today's Blockrevision episode. Today I'll be broadcasting without camera, so as I am off my office, but I hope the quality of the content will compensate you my absence on the video in a visual case. So today we'll be talking about inflation, about important topics regarding crypto outlook, and also how the GDP in the coming year will probably look out. So what are the forecasts for the economy, and also other prospects regarding how fast the economy will grow. At the end, we are obviously going up to present you a trade idea section, so it will be a lot to be told. Okay, so let's begin. We are starting up with Fed Chair Powell's confirmation hearing, and with this summarization made by Bloomberg, we could find that Powell stated definitively that the Fed will end asset purchases in March as currently scheduled. He said that FOMC is likely to begin shrinking it this year, and the process may start sooner and move faster than previous recovery. Okay, so regarding the second one aspect, Fed is not prioritizing inflation over employment, and Powell insisted that he doesn't put either Fed mandate in front of the other. So it means it looks like we would need to struggle with inflation in the coming months, and it won't stop very fast. However, this quantitative tightening may flat the inflation for a while, but it looks like we would sacrifice our wallets in the name of the economy growth. But will it happen eventually? There is still some worrisome cases to consider. Right now, as we can find, US consumers are concerned about inflation, and expectations for price trends over the next 12 months is hitting the highest level since the beginning of this century, and wholesale gas prices are up almost 300% in some jurisdictions in the past year because of more or less low storage levels, increased demand from economies emerging from the pandemic, and also capped flows from some of jurisdictions as from Russia. So this outlook may stay with us for a bit longer, unfortunately. Looking at what the Wall Street Journal has brought to us, Fed waits proposals for eventual reduction in bond holdings. So Jeremy Powell says a balance sheet runoff will have some differences from last time in 2017 to 19, with a sooner start and faster pace. However, even if today's markets are rebounding, Powell confirming the plan for QT, and if it will meet with more than 50 billion per month, taking money off the table, it will be quite of a big thing. Recently, when this case happened, we've seen a market drop in 2018. So it happened right over there, and we have crashed from those levels of 338 on SPY right back to 219. So it was quite of a drop of about 20% in the lowest point. So it means that such of a move that it was back in 2019 may happen this time as well, that may have massive consequences on a broad market. Doesn't mean it may happen in the coming months. I would more strictly consider second half of 2022 as it's more possible case to consider, but we need to stay cautious even right now. Right now, the market doesn't really care what Fed is saying. So with a little correction, we are still in a strong uptrend. Even after this uptrend channel has been broke down, we are still not threatened by any mean and following up the north direction. So I would like to have a look at what SPY has its tendency regarding another important index, that is FANG, and right now we've seen that FANG has peaked in the beginning of November. However, SPY is made their top around 2 times. It means that broad market extends its growth, and there are not only the biggest companies as Apple and Google that is pushing the market forward. Right now the market is in a good condition for further growth, and this seasonality should also favor such growths. Does it also mean that we will see a positive GDP on the coming year? I wouldn't think so. However, the economic outlook made by some analysts is expecting that US economy will grow by 3.5% in this year and around 3% in the year ahead. However, there are some analysts that may be considering such a growth, but it needs a fiscal cliff to grow. However, we are in this liquidity waning environment where it may be problematic. The monetary policy expectations are about to be tightened markedly. Meanwhile, so it may bring more problems regarding such recovery and further growth. Inflation pressures fueled by corona lockdowns supposed to be peaking in this year, and it brings also more risk to the downside for inflation compared to the current narrative. So I would be more cautious. It may be a difficult year for economy, when struggling with inflation and also with such economic slowdowns. And right now we are getting to crypto outlook, and something that the whole sector been waiting. Powell says Fed will release crypto report within weeks, and inside of it he said that CBDC wouldn't necessarily lead to a ban on private stablecoins. So it's very good news that should also favor the bull's return on the cryptocurrency market. A report is expected to focus on CBDCs and right now is also trying to introduce that CBDCs that are central banks' digital currencies should coexist with well-regulated privately issued stablecoins. So it's a very good news for the broad crypto market. As the next news, as we are talking about rebound on the cryptocurrency market and also in a hash rate of Bitcoin, we can find that there has been seen recently massive miner accumulation. So even with this Kazakhstan's miner exodus, when we could find that Kazakhstan has suffered an energetics crisis where lots of miners had to exit miners industry, we can find that with this hash rate drop, there has been lots of miners stepping in and trying to rescue the situation. So the difficulty of mining has decreased, so it has met a lot of opportunity from miners from other parts of the world. So we can find that miners has either started to mine or buy cryptos right at those low levels of 40k, relatively low levels regarding recent highs. And recently there was lots of debate whether the Death Cross, that is crossing 50 EMA on a daily chart with 200 EMA on daily chart, will be devastating for Bitcoin. Right now, as we've seen in the previous such occasions, Bitcoin staying in a Death Cross can really be confirmation of crypto winter as it had been in 2018, but the Death Cross ability to time Bitcoin market tops is recently getting more and more objectively weak, and the 200-day moving average is almost moving too slow, and in a bull market is also a quite of one of the signs that that there may be a pivotal moment on a crypto charts. And right now we are moving to market movers and considering trading economics calendar. Today we have noted an inflation rate year-over-year has finally has topped to 7%. That is the highest gauges since a decade, or even longer than a decade, and inflation rate month over month has hit 0.5%, so it's a little bit lower than November's one, but still really off the charts. For tomorrow we have PPI month of month being published, core PPI and jobless claims 4-week average. That also is very important to being looked for. And we are jumping up to trade idea section, and I would like to consider having a trade on EEM, as we are right now getting out of this descending wedge. So EM is iShares MSCI Emerging Index Fund that you may find an opportunity to bet on this with exposition on BlackRock, such of a offer. And right now, as we are trying to get out of this channel, I would strictly wait for this market candle close that happens half past 15 to 10 today, and if it will close right above 51 points, that may be a good opportunity to buy with a with an expectation to move extension of a move right to 52.5. However, as on a weekly chart and on a daily, we can find that we are strictly extended. I would wait for a possible pullback right to 50.04 levels. That is also a important psychological levels where we could find from there probably tomorrow that we'll start another wave of an uptrend right to those levels of 52. In terms of risk reward ratio, it's 2.4 on a bull side with a possibility of gaining 5% with a risk of above 2%. Okay, so that's it in today's episode. Thank you very much for watching. If you have any question, just put it in the comments section below the video. If you enjoy, just hit the like button and subscribe if you like the content I publish. So thank you very much for watching and see you tomorrow.